All right, so 2 weeks ago on this show, I discussed stablecoin being ahead of schedule. In fact, it was me and Rebecca Walzer, and we pointed to Circle. Look at that. I mean, that arrow, this stock has been a rocket ship. And the thing is, it's been serving somewhat as a proxy for stablecoin. And you know, listen, it just hints that maybe stablecoin adoption is shifting into a much higher gear. I want to talk about that and on other things crypto right now with Custodia Bank, their founder, CEO, Caitlyn Long. Caitlyn has been far too long. And you know, there's a few things I want to talk to you about, but I'll start with this because, you know, I've been so impressed with this. Stripe came out with a report 2 weeks ago that said the adoption of stablecoin was ahead of schedule, and this is despite the fact that there are members of Congress that seem to want to kneecap it.
Right. Well, it's fascinating because obviously stablecoins have sort of existed outside of the bank regulatory perimeter with the prior administration trying to kill it off, and they weren't able to kill it off. Now, of course, we've got a friendlier administration, but the banks are fighting. And the funny thing is the banks are actually now bringing the technology to bank customers by offering the technology in tokenized bank deposit form. And that's where I think the real action is going to be, Charles. There's 5.7 trillion of demand deposits in the US banking system and only 313 billion of stablecoins outstanding. So the real money, as Willie Horton used to say, he robbed banks because that's where the money is. The real money is in tokenized deposits.
I want to ask you about Jane Street. This is it was getting a lot of momentum in social media circles, and financial media put their head in the sand about it. And it's ironic because you've been warning for over a decade. You know, listen, getting involved with Wall Street and Bitcoin, it could be a double-edged sword, and maybe Jane Street is an example of that.
Well, because the derivatives games that Wall Street brings to the table are now being applied to these markets, which were not impacted by derivatives at all until recent years. And obviously the ETFs put rocket fuel on those derivatives markets. And there very clearly was a 10 a.m. slam down every day. The allegation is that that did come from Jane Street. And then as soon as a lawsuit came out, magically the 10 a.m. slam down stopped, but it was pretty clear if you were watching performance at every morning, the 10 a.m. slam down of the price, and it was a lot of us were shaking our heads at the manipulation that was taking place for sure.
You know, I mean, you're on the legal side as well. Can anything be done to you know for you know to some form of justice, not just because of the damage that's occurred, but to prevent future manipulation, because this has hurt a lot of people.
It has. And, you know, in some ways, I was more worried about Wall Street coming in, and the regulators held Wall Street back. So then we had the FTXs and the Celsiuses of the world that were playing the Wall Street games. It just wasn't the typical Wall Street firms. Now the typical Wall Street firms are in, and they're playing the games with much, much bigger money. This is what the CFTC and SEC are on the beat for. And it will be fascinating. There will be discovery in that lawsuit, and I think a lot will come out because it has been behind closed doors and there has been manipulation. So,
before I let you go, I want to ask you about Bitcoin in general. Been under some pressure. Some people say it's trading with tech stocks. Also, the Genius Act, President Trump really forcefully not long ago saying, listen, banks are trying to hold that back. You know, again, there's a wall of resistance over what should be a natural you know, transition in our economy. We believe in creative destruction, except the monopolies out there don't want to see it happen.
Well, I think the Jane Street allegations are an example of the arbitrage that can put pressure on the underlying spot price when derivatives become the tail that wags the dog. And that seemingly has been what's happening. We'll see if, I mean, we're clearly in a bear market right now, but I'm optimistic because that slam down has stopped at 10 a.m. every day. And Bitcoin has done well, like you just talked about with tech stocks doing well during this recent war. And that is not the recent trend. It had been negative. And so the correlation seems to be breaking down. And Bitcoin is very liquid. It's also been doing well on weekends when stock markets and other commodity markets have been closed. And I've noticed that since the war started, Bitcoin has been a proxy for resilience over the weekend because it trades 24/7.
Right. Caitlyn, great stuff. I'm glad you were able to help address that, and hope to see you again real soon. Thank you.
We'll see you soon. Thanks, Charles.
Cool.
Bye-bye.